Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, March 25th, 2022. Market's actually still open. I'm going to start this one now. We've got about 15 minutes left to go in the trading session, but for all intents and purposes, I don't see a whole lot that's going to change between now and then. So I'm going to go get this one out to you guys. It should come out right around shortly after the close. All right, starting out here, QQQ 60-minute chart. You guys know my thoughts on the long-term charts. I've gone over that quite a bit, but I want to reiterate a few levels on that real quick. But start out with 60-minute chart. You have this first time in a while divergent high, negative divergence, as I mentioned with the 60-minute chart of QQQ, making prices making higher highs, and the indicators making lower lows. I had added a trend line here that recently broke, and we're being back tested right now. So if anything, if this is going to play out, it's going to play out next week. Now we certainly have room to push up a little more and keep those divergences intact. Anything less than that, if they burn through, meaning if we just keep going up, 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 and the divergences get taken out, then that's pretty darn bullish. At least near term shows very strong demand in the markets, but as of now, the momentum is waning. And remember, that's a strong uptrend. This is waning momentum. That's what these are, momentum indicators, and that's what they're telling us. And they do a pretty good job indicating when a trend change is likely. And that trend change is commensurate with the time frame you're on. That's a 60-minute chart. This was a daily chart. Remember, you had the same thing here. You had negative divergence on the daily time frame. Right there, you were in an uptrend, and more so in the weekly. You can see that even better. This is the weekly chart here. You had a very strong, powerful uptrend, and from this point on right here, the divergence began. We started making the lower lows, and so far it appears to be early stages of a much larger trend reversal or correction. Let's talk levels real quick. Where I'm on the QQQ weekly chart, so we'll start there. This red line here shows you that's the 40-week exponential moving average, same as the 200-day exponential moving average when you're on a daily chart. And we are going to park right now. We're right on that level exactly. I mean, there's the red line. There's the top of today's candlestick where we're trading at right now. And so this is all this is at this point in time. As impulsive as the buying has been lately, it is simply a back test of the 200-day. We took it out here on this candle. We backed a few failed attempts, and even intra-week popped it, but failed to close above it for the week. And so far, that's what's going to happen again. Unless we had rocketed in the last 15 minutes. Even if we hit today's highs, we're only going to be marginally above it. And then above that, you have the 200-day simple moving average in blue, and that's also intra-week what capped the kickback, snapback rallies then. So those are your resistance levels to watch, and then a big one up here at about 379, 380, and that defines that topping pattern right there in QQQ, and there was our breakdown candle. So that's what the Qs look like. SPY, I want to note that too. Again, weekly chart here. This is end of week right now. We are making a almost perfect back test. We're going to park back, testing this key 451-ish level right there. Again, that is that multi-month long topping pattern right there, sideways consolidation. We had a breakout to new all-time highs. We tested it successfully on several occasions, but then finally that breakout failed with a big red candle through that level. And then as you see here, the S&P 500 tried to regain it on two different occasions, 2 different weeks, intra-week, got above there, but failed to close the week, and boom, was rejected. And so this is simply a back test, and I will say this, this is whether or not we continue higher and go to all-time highs or not. This is an objective shorting entry. In fact, it's one of the more objective ones I've seen in a while. You guys know I started pivoting a couple of weeks, about a week or two ago, meaning on my long-term positions where I closed out some short exposure. I'm adding that short exposure back. Added, I told you a couple days ago, started, added some more today, and we'll pick it up next week. If we start rallying into the week, we start taking out levels. It's one by one. It's not an all or none line in the sand thing. It's incremental, and so we'll just pick it up next week, and I'll talk on what I see if and when we start to get some more bullish developments next week. IWM, also a very objective shorting entry in my opinion. This was a year-long, very, very well-defined sideways trading range with one failed breakout, aka bull trap. Got rejected. There was our breakdown candle. It was big, red candle, just exactly what you want to see down through there. And just like the other indexes, we back tested one, two. We tried to get there. Actually, only one time so far right on there, and that was this one. And I pointed out at the time, said that was a very objective short entry, and it was. We dropped about 10% from there within less than 2 weeks, and you're at that level again. So it's pretty simple stuff. It's not, again, all or none, but the bulls get a checkbox if they can print next week a solid close above that level. Right now they're back testing. So if you are bullish, it's not the most objective thing. You don't want to add at a push to resistance. You want to wait for break above that. And then again, I take everything together. I look at what the SPY is doing, what QQQ is doing, what IWM is doing. More importantly, the big caps, but small caps can sometimes do their own thing. So that's it. So I'm going to end the week with objective shorting ops in all the major indexes. And again, your time frame, you might just want to do a quick short-term tactical swing trade where you short here with relatively tight stops next week if they pop them. And swing down for just pullback trades. Maybe we're looking at some kind of multi-month consolidation here that's going to continue. Who knows? Or you put on trend shorts if you think we're going to go down and hit my or your targets. My targets are still down here. Potential targets on IWM, and again those longer term targets on QQQ and SPY that I told you. On QQQ, should my second and next target get hit, you're talking right now about a 17% drop from where we are today, and T3 would be about a 26% drop, and then T4 would be about 34%. These numbers were laid out before because I measured the drop from, I guess that's sell signal or whatever. All right, so that's it. You are up to speed on the indexes, almost. We're going to go over one more thing. Look at those 60-minute trend lines that I showed you. Here's Apple. There's the uptrend line right there. We're slightly... It's not a definitive breakdown, but we did. If you look at it and you want to get really zoom in tight, we did. It's a breakdown to back test. That's also why I'm going to go home short. Breakdown, back test, we're below the trend line. Again, the trend line is on the 60-minute chart. It's a very well-defined uptrend line, price channel. And like I said yesterday and recently, for the first time now, we have negative divergence. You can see here my next resistance is 176.35, and it's a pretty good resistance level on that 60-minute chart. Apple, multiple reactions there. So I could see this, a pop up there, whether it's today into the end of the day or tomorrow, Monday at the gap open, and then a rejection. That would still have us with a divergent high there. The divergence would just look like that. And so should we get that, that might even be a level. Let's say you're a little more risk averse. You don't like shorting a strong uptrend, then you could wait and see that scenario. If you get it, great. You can add then with an even tighter stop and have smaller losses if stopped out. But of course, this thing could gap down on you on Monday, and then you never get that entry. So I like layering in, and I've got some dry powder. It's not an all-in moment, but it's certainly an objective shorting moment for me. And I'm going to go through a few more, and we'll move on to a couple other trade ideas. Microsoft MSFT, another one of the big FANG stocks. There's a trend line and a price target. I think we're going down to about 290. You can see here this divergence, negative divergence on these indicators. Again, we're on a 60-minute time frame, and this is a trend line right there that just broke down, and we're really running into resistance here about 300 to 305 on Microsoft. Should have pushed up. Next resistance is about 311.88. Call that 311.90. But we're already at resistance, and we already broke down. So that's what we're looking at. If we get that, that'd be a swing target. That's about a 4.5% drop from where we're at right now. Amazon, I've got a couple trend lines. As you can see, that one was broken. We started to diverge. At that point, we had a small divergent high. You can see it right here. And then we made an almost equal high there. The indicators keep moving down. And you've got some pretty good resistance. This yellow line was a big support level back here. That's why I had it yellow. When we broke it, that was a major sell signal for me on Amazon. We broke it, we back tested it, and that confirmed how important it was, because after the back test, we dropped hard, and we've just now rallied back to that. So that's a big level. Bulls want to see it taken out. Bears could use it to short for an objective shorting up. I'm using these really to confirm shorts on the Qs. You know, there's such a high correlation between all these fangs. They move together just like the pot stocks. Birds of a feather flock together. So you know, you can short the Qs or NQ, or you can go individually on these guys if you want. Sometimes one of them will be kind of bucking the trend. There's Tesla 60-minute chart, broke the trend line, and it's just hovering here on this 997.60 support right there. So that's what we need to crack to get the party started on Tesla, and to help some downside, to get some downside in the NASDAQ 100. There's the other alphabet share class, GOOG. Oh no, I didn't cover the other one yet, the GOGL. Little bearish rising wedge with negative divergence. Same story. So we got divergence on all the fangs right now. The other share class, Class A, you have a price channel. And same thing. This is, again, same company, just a different share class, and you have a price channel just like Apple. Actually, that one, yeah, we did. We're just below it, just like Apple. Just slight crack below, and there's your targets. Let's see. I think that is it for the NASDAQ 100 that I wanted to cover. NVIDIA also 60-minute divergence. Oh, and Facebook. Facebook, you also have this bearish rising wedge on the 60-minute chart right there. So, kaboom, this is what I'm looking for next week. Yep, either take it or leave it. Again, you short on a Friday, you've got 2 extra days overnight risk. It could go either way. These divergences could be burned through, but I like it. Like I said, for everything I started with on the daily and weekly charts, zooming down to the 60-minute charts, like I said, it's a counter trend trade. The trend, near-term trend, is certainly up. But I like shorts into resistance, especially when the intermediate term or trend back to November highs. If you look at it that way, QQQ is still well off the highs right now. Alrighty, what else I want to cover for you? Let's talk a quick update on some of the trade ideas. Rkda, that one's closed. I just want to give an update on it. We had a little momentum overshoot. I always talk about that. That's when you have a lot of upside momentum. We were going near vertical to hit T2 yesterday. We overshot and hit that next target, their resistance level, that is, I had up there. T2 was my final target. And it shows you from there, hit that right about that 268 level, and dropped about 23% off there and back below there. So that was a nice exit for those of you that we're able to take profits at T2 yesterday and get that quick, whatever it was, 50, 60%. On that, I want to also go and update. Yeah, let's cover the cannabis stocks, because I mentioned last night there's some movement there. Remember this, I showed you the charts last night in after hours. That's when you get a big pop, a lot of M&A, some M&A buzz going on right now in the sector. And so I laid out some additional targets. Again, you can trade in the after hours session. You turn that on. And I always recommend that. Here's the thing. Here's how I trade. I'll do my stops regular session. I'll always do OCO orders. I talk about that all the time. I'm big fan of OCO orders. Some brokers call them OCA. That means one cancels another. There's the closing bell. And OCO order says, okay, I want to say, let's say you were going to go for the gold on this one, and you're swinging up to T4, so you have an order set there at about maybe just a hair under it. The bottom of that zone's 218, maybe a 216, 214, somewhere in there, whatever you want. Or you can shoot for the top of the zone, but okay, let's just say, keep it simple. 218 is the number, 218, and then you put a stop. You calculate. If you took this one, all these pot stocks were highlighted literally on the day of or right after that, right at the lows. So on the 15th of March is when I started highlighting, and I've updated them since. Told you, I like to take a shotgun approach. You never know which ones are going to run, and by doing that. But they all tend to move together, so you could also took MJ. I'll get to that in a second. But oh yeah, I was going to turn on the after hour sessions. Although now we're Already today's over. Oh, there it is. It's still showing last night or this morning's. So you can see how T3 was hit there. Oh, what I was getting at. Yeah, sorry, I digress. I use those OCA orders, OCO, OCAs, and I'll check the box. I'm on Interactive Brokers. All brokers have, the order entry systems different. Interactive Brokers, you have a little box you can check. It says allow my order to be filled outside the regular trading session. So it's a good to cancel. Sell limit at say 216 with a stop loss order. But I don't do that one regular. I want the key is to get your price target filled, not to be stopped out. And a lot of times there's some noise in the after-hour session. I want to use that and pre-market. I want to use that noise to my advantage. So I leave my sell limit orders to be hit outside the regular trading session, in the stops only during the regular trading session. And remember, do both of them good to cancel. And you can always change those too. And there's nothing wrong if you got the quick buck on this one. Again, anywhere the numbers I gave you last night were just based off where I first started covering them. So that one, is already up 50, over 50%. Nothing wrong with taking profits at a 50% run. There's no guarantee we'll get to my final target, but if the market holds up next week, and here's the thing about it too, the market could start to correct next week, could start to go back down. And the thing about the pot stocks is they march to their own drumbeat. They kind of do their own thing. They're not they're not top components of the Nasdaq 100. They're not components at all of the Nasdaq 100 or S&P 500. So, all right, I'm gonna go through the rest real quick. Just show you the updated charts. Told you I cleaned them up last night. By cleaning them up, I mean I got rid of a lot of the old levels, or I turned down the lines. Hexo, HEXO, that's first target hit. Second target's all the way up about 139, but I can tell you there's a midpoint there. You can see some reactions in there. Probably a stop along the way around $1, but 139 is the second final target on that one. TLRY, Tilray Brands, again, I don't know if that one already hit. Let's see. Nope. Moved up pretty good. Let me turn back off those targets. It's T1. Well, that's been hit. We're now in the regular session as well, so I'll remove that after hours. Again, these are all the levels in the video. The only ones that I added yellow lines that weren't previously covered in the videos in that one. So I went T2. I did a zone from 990 up to about 1058, and we're about close about halfway between T1 and that today, or at least hit at the highs. And anyways, it looks good. Nice little divergent lows, bullish falling wedge patterns since this one was highlighted back on the 15th, which is this candle, I think, right there, right at the bottom. Yep, that one right there. I'm trying to grab it. There it is. It's good for about a 77% run to today's high so far. A little less where we closed. CGC, again, nailed them all right at the bottom. Was where I started highlighting them, and nice run so far. You can see the targets. This one was already hit last night, T2, or in the after-hour session, and that's good for, again, about 75% so far. And I added a third and final target zone should it take out T2. CRON, let's see, that one is 407. It's that first target there. That one's been hit, or 407 exactly. The wedge was taken out. Breakout, first target hit. I didn't put T1 there, but that's it. And then this right now would be my final target. That might be that. I would have added that line last night. That's what it is. So that's T2, final target there. About 512 is the number. You want to sell a little bit below that. ACB. Again, this one had more upside last night, I believe, in the after-hour session. I turned off those again. There's your breakout. 465 first target. 536, and then at this point in time, let's say keep that 632 level there, about the final. I'm not going to call it the final target now. Let's just kind of do an update. As long as the momentum is in these guys, this one has the potential to run up a little higher, but I'm kind of leaning towards this right now, 536. See if we can get that next week. Maybe take quick profits on that one. MJ, there's the ETF. If you just wanted to do a one-size-fits-all shotgun approach via ETF, you can just buy one ETF, and you have exposure to every company I've just covered. They're all components. You're up to about 35% so far, and I think that one was up a little more last night. Let's see. We show last two sessions. Yeah, we were all the way up here at about 1177. All right. All right. Let's see if I have any more. Oh yeah, there was one more I've highlighted for you recently. TGODF, and that one broke out as well. There's your targets. It's a penny stock, so that's 0.1123, 1270, and then 1583. Yep, those be your near-term targets. Okay, I talk often of how aggressive the pot stocks are and themselves are aggressive. This is an uber aggressive, is what I call a gunslinger or Vegas money trade, meaning if you go to Vegas, put the money in your pocket, you're willing to lose, take no more than that. That's what you do with these guys. You don't need a lot of money. This thing could crap out next week, but it was a breakout. I had an alert triggered today on this trendline break. There was your stop under that trend line, somewhat under that uptrend line, your targets. Again, you have a chart on the home page that got out this morning, 45 cents, 57, 68, 88. Actual resistance levels, you want to set it on this one a penny or so below, and that is the final target up there at 88. Needs to take out, you can see on the 1 minute chart today, this is where it was pushing up, and it took some nice volume today too, so the breakout was on volume, by the way. Needs to take out that 41 cent level, and then it should run. Last thing I wanted to show you, something to watch for next week, are bonds. We've had for a while the big rise in yields. I've talked about it for the last year or so, saying that bonds, that in my opinion, in the history of the modern financial market, since we've had U.S. Treasury bonds, this has been, I've been saying, the worst outlook possible ever, because we had virtually no upside in bonds, meaning bond prices and rates go inversely, and when you take rates to zero, there's nowhere but up for the rates to go. At best case scenario, it's dead money, and you earn a paltry fraction of a percent on your interest on the bonds. However, bonds are rate sensitive, so when rates go up, the value goes down. So, and there was an article that confirmed what I've been saying. I've been talking about it. 401k money, why have it in there? The old asset allocation model, which has worked forever and a day, where you have this is your portfolio. Blank screen. You have a certain percent of your assets in stocks, a certain percent in bonds. The old rule was, young, you're 20 years old, you'd have maybe 20% of your money in bonds and 80% in the equity markets. And then the older you got, closer to retirement, I can't draw with this line tool, that's an 80. This number gets bigger, more bonds, less stocks. And the point is, during stock market corrections, bonds historically have gone up. It's flight to safety. Well, that's blown up now, and it's going to affect companies like big pension funds like CalPERS, who just recently, late last year, shifted more money into their bond allocation. And the Wall Street Journal confirmed what I've said. Just saw an article the other day, yesterday I think it was, that we've had the worst performance, the biggest drop in bonds and Treasury bonds ever. Bond prices. So remember, this is TLT, so I'm just going to cherry pick, play the game of the highs and lows. But since COVID hit, and a peak with bonds, that you've lost the 30-year long bond has dropped about 30%. Okay, the interest rate on that was less. At that time, if you bought it, was well, you got to go to TNX, TYX. TYX is your 30-year yield. You had about 8/10, less than 1%. And now, so to collect a paltry, interest of less than 1% over that period of time, you've lost 30% of your money. It's insane. Anywho, now where I'm going with this is, we are coming up on major resistance. So we're not gonna see these long-term rates rise forever. This is TYX, the 30-year yield. It's been in this downtrend bear market. This is when rates peaked back in the early 80s, and we've been in a secular bear market in rates, as I told you. That's a bull market for bonds. Remember, bond prices move inversely. And these are all the quantitative rounds of quantitative easing. But the one I'm looking at, let's look at the 10 and 5-year. I'll tell you what they're saying. TNX is your 10-year Treasury bond yield. So you can see back here in the early 80s, you were getting 15% or so on the 10-year, and now you're getting much less than that, 2.4, something like that. And so rates have come off the bottom, and quite a bit. But here's the thing. Here's what I want to show you. We're coming up to this channel downtrend line right there. Boom, major downtrend line. I'm trying to put my drawing tool on there and show you that's what we're coming up to. And you have big old price resistance. There was this trading range here. This is when quantitative easing started, the first round of QE, when the financial crisis hit in 2008, really rolled the markets after they peaked in '07. And you had several rounds of it since, and then the all-out nuclear option. And then, of course, we snapped back, and we're back in that range. So where I'm going is the top of that range is persistent. So there were a lot of big reactions there. It's right here. It's about a 3.1 yield, 3.2 on the 10-year, and we're coming up to that now with a downtrend line even closer. So we're either going to stop at the downtrend line, get rejected. We could overshoot. Either way, there's minimum upside right now, and if you look at it this way, you also have a bearish rising wedge. So what I think is going to happen is, we've already seen this. The yield curve is inverting. It's not inverted yet. It's flattening. I'm sorry. The yield curve is flattening. And an inverted yield curve, if you take the 10-year versus the 1-year Treasury, or you can do it with different ones, the 2-year and the 10-year, whatever you want, 30-year. When the short-term rates go above the long-term rates, that's when it's inverted. And you've probably heard this many times. You've heard it from me. You've probably heard it in the media. It's been one of the most accurate predictors. In the last 4 decades, there's been 0 false signals. Every time the yield curve has inverted, there has recession has followed, and it's not right away. It's not immediate, but it is sometime thereafter, shortly thereafter. And it's again issued no false signals, and it's also missed 0 recessions. It's caught them all. So what's happening is the Fed's raising short-term rates, and to keep in mind, for a yield curve inversion or flattening, you don't have to have long-term rates necessarily go down. They haven't. They've been going up. They just have to go up less percentage-wise than the short-term rates, and that's what's happened. So the Fed is forced. They have no choice now. Inflation's running away. As dovish as Powell is, he's forced, and the Fed is forced to raise rates, and it will continue to do so. And so what I think will happen here is we've seen long-term rates going up because of that. Everybody, these are different times. This is unprecedented what's going on, and I think those that haven't played this game for a long time, coming out of school with their MBAs and whatnot, and they're saying, well, we're going to see inflation, and we're in an inflation environment, long-term rates are going to go up. No, I think the narrative will soon change when the technicals, confirm we stop here, Treasury rates stop going up, and then eventually these wedges play out, break down. What I'm getting at, we may see a opportunity for a tactical trade to go long Treasury bonds for a period of maybe several months or more in a 401k type instrument, or a trade if we want to swing it. I'm watching these levels. We're getting really close. And where I'm going with that is fundamentally what I think will happen is the talk will turn from inflation driving these bonds up to lowered growth expectations, which also then leads to lower inflation expectations down the road. Remember, the 10-year is looking out 10 years from now. The 30-year bond's looking out 30 years. And so that's what I think is going to happen. On the short end, you're going to see the Fed have to continue to raise rates. In the long end, we're going to start to see soon, there could be a little more upside here. It looks like it. You're going to see probably rates come down, long-term rates, and at that point you're going to see the inversion. Again, right now the yield curve is flattening. It is not yet inverted. That is the 30-year, and then you also watch the 5-year. You're watching the FVX is about there. So if you want to trade bonds, they have futures for the 5-year bond. I believe there are. I posted those on the site before. Traded those. Look at this. Look at this downtrend line. This goes back again from the early 80s when rates peaked. We've been in the secular bear market. We've just rallied up. We're almost there to that trend line. And if I take it down a notch, let's do this weekly chart. This is what it looks like on the weekly time frame on FVX. You can see we're almost to that trend line. It's right there. It comes in off the chart. There it is. So there we are. We're close to what I believe to be on the 5 and the 10-year bond. the drop in those bond prices, and meaning the rise in yields, is almost over. And if I'm correct and we stop there and start to reverse and go down, especially go on to break, here's TNX on the weekly chart. Look at this. There's that bearish rising wedge I talked about. Look at that. Look at the rates. So when we get up here, we're going to have divergence. We already have divergence. We're going to have it if we go up a little more in the yield in the 10-year. And again, if you pop the downtrend line, even it would probably be a short-term intra-week thing, and there's resistance above, and then we come on down. And then if we go on to break this wedge right here, this is probably where we'll come back to right there. And that's on TNX, that's 1417, which is 1.47% or 1.4%. That would be a big drop in TNX, and means that the 10-year bond would rally. And where I'm going with all this, it ties in. This is how my evil mind works. I mean, this is stuff. It's just I look at the interworkings of the financial markets. If that happens, there's big support, by the way, right here on IEF, and that might correlate with that last thrust down for the 10-year yield to hit those levels I'm talking about, then a bounce. There's a downtrend line. This would most likely coincide with the next leg down in the stock market, a reversal, a trend reversal, intermediate term trend reversal, a correction in interest rates, a drop in longer term rates. Again, forecasting slower economic growth. So we'll see. It's something to monitor right now. It is something to trade if you're an active trader. Here, I'll go to, that's what you want to use, futures. Well, we said this, you need to use a lot of money in bonds. Government bonds, they move very small in percentage terms, so that's why the futures are highly leveraged. There's your positive divergence building right now, but not yet confirmed on. This is CB. That's a 6-month chart. Let me take it down to a 60-minute chart for you. There it is. ZB, keeps putting in these divergences, and it's a failure to launch because it needs to take out that trend line. But there it is. So we could pop before we get to those levels. There's a big resistance level. If you get a near-term pop anytime soon, that's 151, 146 on ZB, the 10-year. And then I'm going to give you one more level there just in case we happen to get through that. And that would be about 152, 255 right there. So there's a potential setup. But again, mark this trend line. This is what you want to see. This break, and then ZN. ZB is the 30-year bond. ZN's the 10-year bond futures. Remember, these are trading the price of the bond, not the yield. The ZN, come on, I've got it here somewhere. There it is. ZN, not as clean. No, actually, we have a pretty good trend line. There it is. Yeah, nice 3 distinct reaction points. The high right there, actually 2 more there, and we're building these divergences. So this is one to watch next week. So to kind of wrap it up, where I started at the beginning of the video, I'm looking for the market to, some downside next week, likely in the markets. Possibly a bit more upside, like I showed you early on in the video with QQQ and Apple and all those. And if so, we could see these bonds go down a little more, but then you want to watch for breaking this trend line, and then should lead to a rally in the 10 and 30-year bond, and the 5-year for that matter. I'll have to mark up this chart later, give you some targets. All right, that's it. Let me make sure, look at my notepad. Yeah, I think that's everything I wanted to cover. All right, guys, I'm going to wrap it up here, and we'll pick it up next week and go from there. This has been Randy Finney with Right Side of the Chart. Have a great weekend.